Hello, everyone. Welcome to our May 12th edition of This Week in Crypto. I'm your host, Brian. Maxim will not be joining us today, but for those familiar, uh, we will kind of go through the metrics today, and maybe around the 35 to 40-minute mark, I will open it up to questions so we can get some in a little earlier than usual. This has been another rough week, and it's been a little rough ever since mid-April, where we've been sliding for quite a bit. Everything we talk about on this call, by the way, is not to be considered investment advice, but what we do here on this channel, for those of you who are unfamiliar, we try to go over what kind of divergences we're seeing in the on-chain and social metric landscape, and base our conclusions on history of what typically happens when these kinds of divergences form. So with that said, when we look at what's going on right now, it's kind of a depressing sight because we see a whole lot of red. Obviously, Bitcoin being down 9% is going to take down a lot of crypto with it, as always. Ethereum being down 7%, that doesn't help much either. So when these two are down, typically altcoins are going to follow. And that's exactly what we see here. XRP down 6%, Cardano 6, Lido about 6, Dogecoin 8, and then we get into some serious drops like Hex, Matic, Avalanche, Toncoin, Internet Computer, Filecoin, Aptos, Arbitrum, ApeCoin, EOS. I won't list them all, but Conflux here is our biggest one in the top 100 market cap asset list. Moral of the story is prices are way down, and so are crypto's emotions right now. Traders are extremely bearish and really have shown signs of this over the past week, and we're going to get into that as one of the feature stories of our stream here today, because as many of you have likely heard, we at Santiment believe pretty wholeheartedly that prices tend to move the direction of the crowd's least expectations. So if prices are looking great and the pump looks like it's never ending, the crowd will often get euphoric, and that tends to be when tops start to hit, and people who buy at 60K plus Bitcoin get fooled, and they are left holding the bag when it drops all the way back below 20K a year later. Vice versa, when a lot of people are doubting crypto like they were at the beginning of this year in early 2023, you see what happened. Prices are still up, especially on the Bitcoin side. They're up over 60% still since the start of the year, when everyone assumed that Bitcoin was going down to 10K. I shouldn't say everyone, but you get the idea. When the mainstream crowd is overwhelmingly leaning a certain direction, it really increases the probability of the other outcome coming true, because whales are constantly looking for those opportunities where they can catch everyone else, putting up buys when they want to sell, or putting up sells when they want to buy. And that's kind of the way of crypto, especially in such an anonymous type of sector. People can manipulate markets and do what they want with them without a ton of resistance, and without having to disclose what ownership they have in something, even if it's millions or even billions of dollars. And that's unique from equities, and can cause a lot of turbulence and unexpected outcomes when conditions are bullish or conditions are bearish. So with that said, we can also look at what's happening with social and the amount of discussion going on with these assets right now. Bitcoin is being talked about a little more, so this is a sign that we're starting to get toward that complete FUD that we're looking for, that would indicate that prices will start to turn around. You usually see the social volume of Bitcoin go up when there is either a huge rise in Bitcoin, a huge fall in Bitcoin, and social and price dominance is really starting to emerge. This obviously wasn't a price dominance week for Bitcoin. Ethereum even outpaced it, only dropping 7% compared to Bitcoin's 9%. But earlier, like a month ago, right when the top was starting to hit, that's when we were seeing Bitcoin's price dominance really taking effect. And altcoins, even though they were climbing a little bit in mid-April, they weren't climbing quite as much as Bitcoin was on average. So that was giving Bitcoin a lot of extra social volume. And now it's starting to show in the opposite direction, where Bitcoin's getting talked about a little bit more thanks to this fall, and a lot of people speculating that it's going to go below 25K, which is very realistic now that it's at the 26.5K level. Just understand that with this much negativity, which again, we'll get into more, there's going to be quite a bit of polarization and a lot of people potentially buying at 25K if it gets that low. And then a lot of people selling off more, thinking that, you know, the price breaching 25K again means it's destined to go below 20K or destined to go below 15K. And usually that's a mistake, right? We don't think that, you know, if one psychological support barrier is broken, it's going to automatically repeat history and now go through the cycle of breaking all of the other prices at the same time. That's usually not how it works. And history is made to be broken, especially with such a small sample size, where, you know, we've seen something happen one or two other times and people automatically assume that that's going to be the new normal. If it breaks 25, it'll go to 20 and then 15 and then to 20 and 25 again. Not always how it works. More realistically, based on what the metrics are showing, we probably continue to see ranging, at least based on my opinion here. And that's not always the case, but we try to deal with probabilities and most likely outcomes, and we'll get into more on why here on the call. But yeah, that's as far as the you know, main social and price returns look like right now. Let's look at how Bitcoin is doing behind the curtains and see on chain what kind of anomalies might be forming at the moment. Let's go to the last 6 months here, and we're looking to start out with volume, transaction volume, USD, and transaction volume in BTC in mind. And it doesn't look like there's a ton of volume climbing whatsoever. It's kind of stayed flat, and it's been kind of concerning ever since mid-March that we haven't seen an interest rise in trading volume, despite, you know, prices breaching 30K at one point, going back and forth there for a while. And now we have to see if this latest slide is going to start to heat up the trading volume, and we start to get a little more interest from the people who have been waiting for some volatility and a breakout from that tight range that we've been at, in that, you know, 28 to 30K range that we were kind of fluctuating through. And then transaction volume pretty much looks the same. It's not really showing any big signs of a rise. It's kind of fallen since the 30K level in mid-April. Unlike trading volume, which had its biggest spike in mid-March, the on-chain volume happened in mid-April and then fell off and hasn't recovered since. So in both cases, we're not really seeing any bottom signals here. But let's scroll down and look at more. Bitcoin's daily active addresses certainly isn't a great sign, considering the average has really fallen off. You can see all of these low DAA days, where the amount on the 30-day rolling average has gone from about 1 million a day down to where it is currently at 878K. So that's a pretty sizable drop. We're talking about maybe a 12% drop or so in the amount of unique addresses interacting on the network right now. Not ideal. We'd like to see utility rising over time as prices generally follow, given enough time with that higher level of utility, but it's just not what we're seeing at the moment. Circulation not really looking better either. You can see that the amount of unique tokens moving around on the network is staying low. We had one big anomaly here on May 7th, but it didn't really change anything. And in fact, right after May 7th, we had that big drop off going from 28.8 to 27.7 the next day. So we can also look at the NVT model, where we can see that there is some indication that circulation could be making a turn. You can see we were in this long 9-month bearish divergence here. And finally, it looks like there's at least some signs of a turnaround with some semi-bearish divergence. I would presume that this is, if we go back here to Bitcoin, it's probably just related to this and the small sample size we've seen so far in May. If we look at this 30-day average, yeah, there was a very slight tick up, but it's not much. And if we continue to see those low bars, it's just gonna, give it a couple more days here through the weekend, and I wouldn't be surprised to see this model on Monday indicating another red month like the others. So long story short, when you see these long red stretches, it generally is more indicative of uncertain or negative price returns in the future. Not always the case, right? We saw in the midst of March through September 2021, which was a pretty good stretch if you were able to wait through the volatility. We saw that big rise in April, huge drop in June and July, and then it recovered by the time the red stretch was over. Here we actually saw prices rise slightly back in 2020 despite the bearish divergence. But you look at this one and you look at this one, and you can clearly see how prices were not able to do well. Now, this latest 9-month stretch, it initially was sliding quite a bit, which is expected with the red stretch, but then it had this big boost, and 2023 has been quite good for crypto, with Bitcoin up over 60% still. Just understand that it could easily follow this kind of pattern where it's a little up and down with flat to negative returns given enough time for this bearish divergence to play out. We need to see enough unique tokens being moved on the network at all times, or else we are in trouble, and you have to be a little bit tempered with your expectations for how high crypto can actually pump. Now let's take a look at average trading returns, see what's going on here. Ideally, we like to look for setups where both the short/midterm as well as the long-term average trading returns for people, known as MVRV, are in the negatives. And we saw a long stretch of that in November and well, pretty much November going back to October, September as well. And then December is where it started to even out, fall back below, and then this was ideal time right at the end of 2022 to buy up plenty of crypto because you saw what happened. Prices just soared going into the new year. Then we kind of had the opposite, where we had both the 30-day and the 365-day MVRV well above zero. That marked a bunch of local tops and prices ended up falling. We do see the 30-day MVRV, though, now at its lowest point since mid-March. So we're at about a 2-month and change low for the 30-day MVRV, sitting at about -7%. This isn't exactly a huge danger zone. Typically, we like to look at around about right here. About -15% is the spot where it's historically a good time to buy if it gets that low on this red line. The yellow line, there's a little more variance because this is a longer term indicator for active 365-day traders. But no matter what the time frame, when it's above the zero axis, there's a little more risk. When it's below the zero axis, like we saw here, there's less risk, and it's more indicative of an ideal time to buy in. So mixed reaction at the moment, where the midterm, we might see some good signs of a little bit of a bounce, especially considering the slide has continued here just in the last 24 hours. But long term, be a little careful until you see this yellow area line start to get closer to neutral. And then we discussed funding rate on our Twitter timeline earlier this week. Take a look at what's going on with BitMEX, which is often a very good indicator. I'm going to clear out the rest because they've been a little more flat and non-exciting. But check out what's happening with Bitcoin. You saw this big spike if you were watching our Twitter. I think it was on Monday. We reported this, and it was, based on history, a very good sign because we saw this last similar negative funding rate spike happen here in mid-March, and that resulted in absolute liquidations all over the place and a huge surge with crypto eventually getting above 30K. But at least for now, that hasn't really happened here. We saw almost identical, levels of spikes on BitMEX. We saw maybe a very small rise to right here. And as soon as we got back up to 28.1, 28.2K for Bitcoin, you can see how the shorts closed out. And that was pretty much the opportunity to ride up the liquidations. And then it immediately started to fall back down for reasons outside of funding rates, of course, because there weren't any positive extremes here either. So a bit unfortunate there. It looked like a pretty good indicator that we may see a bounce. Obviously not to the extent that we saw here from March to mid-April, but at least something that could potentially tease 30K again or something. And that just didn't happen. And that's sometimes the case. If you're a little too reliant on funding rate, you have to be able to look at, utility as well, and daily active addresses and circulation. Of course, as we saw, they've really been drying up and not looking very, very positive for crypto. Now on the whale side, also not much going on. It doesn't look like the activity is anything special here. 100K is pretty much flat, and 1 million has actually dropped off quite a bit. These are the $1 million or more transactions on the BTC network. If I draw just a little 7-day moving average, you can see here in blue, this is the $1 million or more average. It's back down on the 7-day rolling average to levels we haven't seen since mid-January. And that's not the end of the world. We don't need high whale transactions for prices to rise. But during a fall like this, which we've been seeing for about a month now, ideally a turnaround sign would be if these 100K or $1 million or more transactions started to spike, indicating that whales are getting back in and accumulating at these lower prices after presumably cashing out near the top at that 29 to 31K level. Let's look at the amount of shark and whale addresses appearing on the network right now. So a few things here that I'm seeing. The 10 to 100 Bitcoin addresses are continuing to rise. That's fairly normal. Let's zoom out to the last 2 years here so we have a bit more context. So yeah, the 10 to 100 tier has continued to rise, and it's doing so for about 15 months now. It kind of bottomed out here in February, and it's been rising ever since. So these are kind of the smaller sharks. 10 to 100 is anyone between, about $260,000 to $2.6 million right now. So certainly not chump change, but they're more on the small scale. They're not usually, one individual shark, if they, shed all of their assets or double all their assets, that won't be enough to really shake up markets. But the 100 to 1,000 tier definitely is. Then we're talking about 2.6 million to about $26 million in their address. So you can see that they've kind of been up and down, lots of dropping here, fluctuating, and it kind of really took off here right after the FTX collapse, which was here at the beginning of November. And then it just skyrocketed, and you saw way more 100 to 1,000 addresses on the network. But then, interestingly, this was about 2 weeks before the local top where Bitcoin got to 31K. Big drop here, and now it's starting to rise again. And the 1,000 to 10,000 has just stayed very low. It did kind of bottom out in early March and is, arguably starting to climb up, but this is very little and it has a long way to go to get back to where it was in March of last year. The blue line, so this is tricky because 10,000 to 100,000, you're starting to talk about billions of dollars now in addresses, and most billion-dollar plus addresses belong to exchanges, and they almost act inversely to the price of crypto, if not just very inconsistent and not really meaningful data. But for the few active traders who actually are in this region and hold that much in one address, it is looking like there are more addresses being created over time. It was sitting at a low of 76 based on the past 2 years. And now it's currently sitting at 112, which is a pretty nice percentage increase. Just know that the red and yellow lines are the big ones that you should be paying attention to most of the time. And just to jump over to my other template really quick, which we'll come back to. This line here combines 10 all the way to 10,000. These are kind of our small sharks to our big whales that are generally humans before it gets into those exchange addresses above 10,000. And you can see that, it made a little bit of an attempt to rise up right there, but the last couple days have been, oh, that's weird. It's actually not refreshed. Give me a moment. Yeah, so not much has changed. We continue to see that the overall trend is declining. However, over the past month, I will say that this divergence doesn't look too bad given a short sample size, with prices moving down like so and whales going like this. That's not the worst setup in the world. I would like to see a little more increasing. It's starting to waver here, where the whales are holding a little over 2/3 of the entire supply, sharks and whales, that is. If we start to get to about like the 67% range for this green line, very promising sign. But it's at least moving in the right direction short term. It just has to stop looking so rough on the long-term time scale. So if we zoom out to 2 years again, you can clearly see, there's so far to go to start catching up to where whales were back here. And you can even see how they were taking profit about 2 weeks before the all-time high in November 2021. That's when they hit their top, and it's just been a huge sell-off ever since. So, we've seen this story before where, from April till present, it's starting to climb up. It's almost identical to what we saw in November to January of last year, 2020, November 22 to January 23. But even as prices were rising, look at how they were taking profit as prices moved up. So whales have not shown the same confidence as traders were heading into the new year. And of course, now we're seeing a ton of FUD from the traders, but at least sharks and whales are starting to move back up. Now, if we remove Bitcoin and just look at the stable coins now, you can see that Tether is starting to show some signs of decline again after having some huge accumulation from August 2022 to pretty much the beginning of May. And now, as soon as May hit, if I highlight just May 2023, May 1st, 2023 until now, over the last 11 days, yeah, they've dropped about 1.5% of their overall bags. While I have this highlighted, you can see that USD coin is actually rising once again, up 1.5%, BUSD up 2.03%, DAI up 2.48%, and True USD is starting to rebound again, up 37% since the start of May, and USDP is continuing to decline as they have been throughout the year. So kind of a mixed bag. I'm still a little concerned with this minor drop off of USDT. I know it's not a ton, and we're still way up with sharks and whales showing significant buying power right now. But I'd ideally like to see it continue to climb instead of start showing this drop formation. USD coin, you know, as many of you remember, back in March, it was going through a lot of drama and people questioning whether USDC would cease to exist after getting in trouble with the SEC. But it appears that confidence is back, and sharks and whales are rapidly accumulating it once again. So whenever we look at sharks and whales, I think first and foremost, we look at that 10 to 10,000 tier for Bitcoin, followed by $100,000 to $10 million USDT and $100,000 to $10 million USDC. Those three together can tell a very convincing story. And right now, Bitcoin is declining, Tether is very slowly declining, and USDC is rapidly coming back. So it mostly paints a neutral picture. I still put the most credence in the Bitcoin sharks and whales, and they are showing some decline right now. And then, of course, BUSD being the third largest stablecoin by market cap, it's kind of hovering. It has been rebounding a bit since March, which is good. DAI is way up and looks the best out of these top 6 market cap stablecoins. And then, as I said, TUSD, big drop, but recently started to see some accumulation just in the past 3 days. And USDP is the worst performing, with, you know, this huge rise in March when everyone was distrusting USDC. And then it looks like all of the USDP that they were holding is being swapped back in for USDC. So that's a bit of a whale and shark update. I wanted to mention social dominance because we talked about at the beginning of the show where people tend to talk a lot more about Bitcoin when it's seeing an extreme. And the big extreme from March and April was Bitcoin soaring and having a great time since the beginning of 2023. And now it's starting to decline again, going from that almost 31K level down to 26.2K again. And social dominance is still looking pretty good, which is a good sign. Generally, people talking about Bitcoin more is good for crypto overall and leads to more organic pumps. You can see clear signs of that going back to, you know, the summer of 2021, where prices were falling, a lot of panic was happening, and then eventually we had this big breakout that eventually got us to that November 2021 all-time high. Here it's, you know, we still have a little bit of lingering from the euphoria going on, and I think that a lot of the social dominance staying high is due to now a lot of FUD happening. So there's big polarization, right? A lot of people doubting crypto and a lot of people excited for crypto because, you know, given perspective, we're still way up from the beginning of the year, and there's a good reason that people who may have bought right at the beginning of 2023 are still quite excited for crypto. We touched on the funding rate already. The BitMEX one is one to focus on. If we start seeing those shorts again, it's a very good sign for crypto. Now let's check out the ratio of transactions in profit to loss, which is always a good swing trade indicator here. So if we zoom into the last 6 months, so this is a good sign. We're definitely, let me switch this to a line. Okay, so we are absolutely seeing major loss transactions happening on the network right now. Over the past couple days, tons and tons of trades are going on where Bitcoin and Ethereum are moving out of that address at a lower price than when it came in. And that's usually a good sign of capitulation. And the major reason why we are seeing such low levels. And typically these low levels, as we can see here, lead to good results. This was the biggest of the past 6 months prior to this one. and that was exactly when prices bounced. You can also see similar levels here in November and in December, where prices bounced soon after these low loss ratio spikes hit. So that would be a very good sign, at least for the short and midterm, that we may be seeing a bounce in the coming days or the coming week. Just understand that it's not a long-term indicator that is going to say that we're ready for another breakout and we're going to go to 30K and beyond. Could just be, you know, up to 27 or 28, and then a bunch of profit taking is happening again from all the people who are buying the dip as we speak. So just keep that in mind. It is a good sign that we are seeing such low spikes at the moment, but it is not going to be something, you know, to let Bitcoin sail and coast for the rest of the year back up to an all-time high or anything. Things can change in a hurry. And speaking of, you know, all the people buying dips, let's take a look at some of the social trends going on right now. Beginning with just the overall amount of discussion. And let's look at it by social platform here for a sec. So you can see the Telegram is actually extremely low, especially over the last couple of days. You can see there's barely mentions of or discussions related to crypto compared to what we were seeing at a pretty steady pace over the past month. Reddit isn't looking much better. Reddit goes through its normal 24-hour cycle where, you know, prime US hours are typically when you see these high spikes. And none of these spikes right now are anomalies by any means. Twitter, basically the same thing. Obviously, many of you may have heard that Elon Musk is stepping down as the CEO of Twitter, but he's still going to have some of his hands on the product. And he is showing, not Elon Musk, but Twitter in general is showing that they are not really talking more than usual in relation to crypto right now. 4chan, which we added recently, is also not showing any big signs of conversation spikes. So overall, when we look at all of those platforms together, yeah, it's pointing to like a further decline just in this past 4 to 5 days of less and less discussion. That's not exactly a bad thing. We don't need to see discussion rates going through the roof in order for prices to rise. Sometimes it can actually be a good thing where we are seeing that very few people are paying attention to crypto, and that ends up being the time that we see a big pump to blindside all the people that were, you know, writing off crypto and not expecting anything to happen. Let me zoom out really quick. See if I can look at the last year. It takes a little while to load. So if it doesn't load in a few seconds, I'm just going to switch to buy the dip here. All right, so we'll let that load and check it out in a bit. But while that's in progress, let's see how many people are calling for a dip buy right now. We'll just do the last month. Social dominance, take that on so we can see the true percentage of dip buy discussion. So yeah, we are seeing some good signs that people are calling for a dip buy, especially right here, which was when prices were at 26.3K. This was about 6 hours ago. And yeah, it does look like there are a few signs of people trying to get optimistic and thinking that we're about to bounce, but not much. Typically, if we see a ton of buy the dip calls like this, it'll lead to, you know, maybe a very short rise followed by continued falling. But I think this might have been more of an isolated spike than anything. So it's actually kind of a good sign that we're not seeing a ton of optimism and people are just expecting that 25K and maybe even below that is a little inevitable right now. Telegram, yeah, I mean, Reddit has a little bit of a buy the dip spike. It's highest since late April. Twitter, nothing really, maybe very slight rise here, but not enough to get too excited. 4chan, nothing really. 4chan has been extremely negative toward Bitcoin for quite a while now. And then another one we can look at, get the latest data up, check out the positive sentiment versus negative sentiment, because this is a great short-term indicator where you'll typically see big spikes in one direction lead to the opposite result happening, where you'll see a lot of optimism and then prices drop. A lot of optimism here, prices drop. We did see an interesting anomaly here. It's hard to see, but if we look at just the last week, it'll be a little more clear. Check out all the negativity that formed here on May 10th, right as prices bottomed. And then what do you know? It bounces and all of that negativity goes away. This is not uncommon. Even right here, negativity, prices rise right afterwards. So you want to see the reds actually exceed the blues, and that is a promising sign that that the crowd is getting too negative. So right now it's kind of neutral. Like I said, there is a lot of FUD going on, and there's certain metrics that indicate that people are really doubting. But right now it's kind of positive and negative sentiment starting to rise, because this is the lowest prices have been in a couple of weeks now. I think over a month, this is the lowest we've been at. So naturally, there's going to be a little more conversation from both sides about crypto. But watch to see if the red starts exceeding the blue. That would be a very good sign that the FUD is starting to take over, and we are more probable to climb with our price going back up to, potentially 30K. All right. Let me check on the 1 year. Yeah, it didn't load. That's a shame. I wanted to show more context on the long-term end, but that's okay. We'll look at that another time. And in the meantime, I want to look at a few of the articles that have come out in the past week on our insights page. Touched on the Fed 10 days ago. We asked whether the Ethereum Foundation marked the local top because they sent 15,000 Ethereum to Kraken, and this was pretty much right as prices were topping, and then prices reversed. We saw active deposits going nuts, and yeah, sure enough, I mean, looking at Ethereum's price now, since that article came out about 5 days ago, prices have continued to decline, and they're at about 1770 now. And then we talk about that danger zone and opportunity zone. Let's take a look really quick at how Ethereum's MVRV looks. So about the same as what the article was showing, maybe a little lower. We had the article come out right about here. But yeah, now the 30-day MVRV is at about -7% for Ethereum. 365-day is still up at 14%. So ideally, we want to see a setup more like this, where they're both in the negative. And then going back to the article, it pretty much just talks about the major rise in active deposits and the 30-day MVRV being low. And then, of course, you can look at specific wallets to see, when a big move has happened. So if you want to look yourself, we can open up our top transactions model here. And it doesn't look like there are any special big spikes happening. There were a few on May 8th that are of notice. But they're mostly pretty obscure altcoins. I won't get too much into it. You can see that Bitcoin here had a huge transaction, 3.3 billion on May 7th. So if we go back to, let's just open up a new chart template really quick. And if we sort by value, check this out. Just as they said, there was a massive $3 billion plus transaction that happened on, what was this, Sunday. So Sunday, which is an interesting day, it's usually one of the lowest volume days of the week every week, and this whale didn't care and made a massive transaction. We look at where it went, and it went to a brand new address that went from 0 to 117.35K in Bitcoin, which was at the time about 3.3 billion. Now it's at about 3.1 billion. So yeah, this address lost about $200 million worth of Bitcoin in just the last 5 days after it made that transaction. You can see how the price of Bitcoin changed, and yeah, right after the transaction took place, look at how prices plummeted. So, this could very well be an exchange address. In fact, it's pretty likely. And oftentimes, when massive tokens move to exchange addresses, it indicates that there's going to be a drop in price. And this amount is certainly enough to move crypto on its own. So yeah, there was a huge transaction. This is one of the biggest in the last couple of years, actually. You can see by far over the last month, it was the biggest. And there was even another one that happened on the same day, just about 4.5 hours later. Let's take a look at that. Oh, that's the transaction hash, which by the way, you can see as well just by opening that right link. But if you open the to address, it'll pop up the actual historical value of the Bitcoin address. And it looks like they hold just above $1 billion, 1.1 billion or so in Bitcoin right now. All right, going back to articles here. So we talked about the ETH Foundation article. I definitely recommend you check that one out. I wrote about the stablecoin on-chain metrics. Check this out. So the combined market cap of Tether, USD Coin, Binance USD, and DAI, they've really been plummeting. And especially since the FTX collapse, that's when you really started to see the overall market cap of stablecoins moving down. So yes, this means there is less buying power overall in crypto right now. I take it with a grain of salt because I tend to believe more in just what the sharks and whales are doing, which we checked out earlier on this call with the $100,000 to $10 million tiers and what they're doing. And they're a little more neutral, but especially the lower traders right now, the smaller traders who maybe own a couple $100 or a couple $1,000 in stable coins, or even just $7, whatever it is, they're shedding their stable coins and kind of getting out of them. And that isn't always a perfect alpha indicator. But I would be concerned just with the overall market caps drying up this much this fast. I think it's a healthier crypto ecosystem when there are plenty of stable coins being held by a wide variety of traders. And yeah, I mean, you can even look at how prices, especially USDP, it's all over the place, but you can see anomalies for true USD here on May 1st. This was when everything went crazy in mid-March, and that coincided, by the way, right with the start of that big bull rally from mid-March to mid-April. And then whale transactions not doing a whole lot. So I just talked a little bit about how the ideal setups for Bitcoin and stable coins. You root for Bitcoin going up and stablecoin market caps going up at the same time. That's the best scenario. Second best would be Bitcoin market cap going up, but stable coins going down. Third best is Bitcoin going down and stable coins going up. And then obviously fourth best would be the Bitcoin and stablecoin market cap going down together. We had a great community insight released by m.indrak a few days back, and it's all about Litecoin and kind of what the reaction is as a result of Bitcoin's congestion on their network right now, and how people are using alternates. That's causing some interesting anomalies. Litecoin's actually been doing pretty well over the past 3 to 5 days in relation to the rest of the crypto prices out there. So it's a good read, and I definitely recommend checking it out, especially this chart here with the smaller traders really suddenly going on a surge in Litecoin held. The sharks and whales are still kind of fluctuating, so I'm a little nervous by this, and I don't know if it says that there's going to be a continued breakout, but I think this catch right here with the yellow line is a really good one, and you should read more about his explanation. And then yesterday, I put out an article about PEPE finally losing its pep in its step. You know, there's been a few very good indicators that we've used historically to look at meme coins or very new coins that suddenly come out of the gates hot and have a huge pump like PEPE did. You know, kind of similar to what Shiba did a couple of years ago, where it was like the second coming of Doge, and it went on this huge run, and everyone was on the big Shiba bandwagon all of a sudden. That basically happened with PEPE, where we saw this big social dominance spike right before the prices top. So this was a great alpha indicator. If you see suddenly the crowd is talking about PEPE at 15% of all top 100 market cap assets, even though I don't even think PEPE was near top 100 at that time. This still measures against the other top 100 assets, and it was getting 15% of discussion, which is enormous. And it was pretty indicative that we were very near a top, and that's what happened just a couple hours later, and prices have fallen about 70% since. I would watch to see if social dominance, now that things are falling, if it starts to spike again, that means everyone is kind of scoffing at PEPE and saying it was always a scam, never should have been in it. Now all those people who bought at the top are paying for it, and they're almost kind of laughing at the people who were into PEPE. That would be a sign that the prices might be reversing again, and we could be seeing a secondary pump. It's pretty rare to only see one pump overall. The hard part is just timing when that rebound is going to happen. So all these people, I guarantee, we're trying to buy these dips, and we're unsuccessful. And when they start to give up on that dip, that might be when the dip buy opportunity finally happens. So keep a close eye on social dominance, just like you should be keeping a close eye on active addresses, which are almost a mirror image of social dominance. You can see when all of the address activity spiked like crazy in about a week ago, May 5th, and then prices dropped. Pretty normal with a very small asset, where it's suddenly getting a ton of unique addresses saying, oh, I want in on PEPE. I need to see all these, some of these gains in my wallet too. And that's exactly when the top happened, and they paid for it dearly. Now, there are still whales and sharks in PEPE, but they can be difficult to decipher because the price is so small that even if we look at, you know, 100 million to 1 billion coin addresses, we're really only talking about, you know, addresses that hold like $1,000 to $10,000 in PEPE. So that's mixed in with, you know, 1,000 to infinity, or I'm sorry, 1 billion to infinity. And you're mixing in like the thousandaires with the millionaires of PEPE, assuming there are at least a few millionaires, which I'm pretty sure there would be. And basically these top two lines, they topped right here at the top, price top, and they've been going down. So I do think there's some good alpha with it. And if you are interested in PEPE or just another small asset like it, I think looking at the largest tiers, assuming you're not getting into exchange addresses, can be really valuable. And if you see these blue and pink lines start to rebound and go back up, when you check it out on Sandbase yourself, that would be a very good sign that that second rally may be kicking off. Also notice how PEPE's MVRV has fallen back down to neutral now. Really the first time since it started off with a bang that average traders are back down to, at least at the time of this screenshot, just 2.3% above zero. So all the people who bought the top quickly pushed the average trading returns back down to even after it was up enormously here and here. And that's ideal. I wouldn't be surprised if it's in the negative range now. Let's do a quick check on that. So also just to look at it, yeah, all of the biggest PEPE transactions happened right at its inception. You do see one outlier here on May 8th, This looks to be a centralized whale address, and yeah, they basically, it's interesting. So they did a ton of accumulation on May 8th, then dropped it all. Then they accumulated again with 9.5 trillion PEPE on the 11th, and then dropped it all again. Let's get that off. And if we just add PEPE's price, let's see if there's any correlation here. A little bit, yeah. I mean, it looks like they accumulated right before the dip, and then, I mean, not really. I think that they accumulated, assuming they might be buying a dip here, and then they just quickly dropped back out, and they did the same here. So it could very easily just be an exchange address, and it currently holds about $2.4 million, which doesn't sound like a lot if we were talking about Bitcoin or Ethereum, but in Pepe, that could very well be a top 20 to top 30 address in terms of the largest holders. All right, so besides that, MVRV is indeed in the negative range. The average trading returns are now at negative 7%. At the time of that writing yesterday, it was plus 2.3. So yeah, now is really the first time since Pepe started being publicly traded that we're seeing a negative MVRV, meaning the probability of a rise is finally above average. Take that with a grain of salt, obviously. Pepe is a meme coin. It runs on speculation, and anything can really happen in such a young coin, especially when the markets are being volatile the way they are right now, with a lot of people assuming we're destined for 25K and below Bitcoin. So anyways, that's a little update on our articles. We went a little longer than I thought on the market coverage, but I'd like to take 10 to 15 minutes to answer a few questions, whether it's just about the markets or about a certain asset. Balrush has a few.
Okay, we have a couple of suggestions. One is to go deeper into a comparison between Bitcoin and Ethereum. And then it's some altcoins, including GALA, Render, and Radix.
Okay. Yeah, let's do a brief comparison of Bitcoin and Ethereum really quick. There's a few ways we can do that. I have some templates that look at not just Bitcoin and Ethereum, but a few of the top cap assets. And we can start here just with a granular look at the trading volume. And we'll just look at the last week here. So you see basically the top 10 or so largest non-stablecoin assets in crypto. Bitcoin's trading volume is here. Ethereum's is here. They are essentially identical at the moment. So not too much we can say there. It does look like, yeah, they're all in a very tight range in terms of trading volume. Litecoin, interestingly, yeah, not much with the comparison for trading volumes. So let's move on to something else. How about weighted sentiment here? So looking at the crowd's expectation, if we go back to the last year here, this is just looking at five Bitcoin, Ethereum, Binance Coin, XRP, and Cardano. Ethereum is here, and it is seeing extremely negative sentiment, even more so than Bitcoin. So that's telling. This by itself would indicate that Ethereum has a better chance of a bounce because of the massive amount of FUD going on with it at the moment. And Bitcoin is negative, just not quite to the extent of Ethereum, which is seeing by far the most negative sentiment it's had of the past year. And while we're here, yeah, we see a huge downturn in Binance coin sentiment. XRP is quite low. Cardano is a little more neutral. But yeah, I mean, this really is telling of how low the weighted sentiment is for a lot of the largest assets in crypto right now, with Ethereum being by far the lowest. So I think that's a big bonus point for Ethereum potentially having some sort of bounce here in the near future, even if it's independent from the rest of the markets. can also look at MVRV Z-score. This is an interesting metric that kind of combines different timeframes for MVRV and looks at the short, mid, and long term together. And the lower, just like with regular MVRV, the lower the MVRV, the better. Higher, it means there's more risk. And the Z-score for Bitcoin is actually still quite high because obviously it's up over 60% in 2023. Ethereum isn't quite that high in the year, but I think it's in the 50% or above tier right now. So Bitcoin Z-score is right up there with where it was before the drop happened in June. So that's not great. Ethereum, on the other hand, it's a little hard to see. Let me make it something bright like pink here. So we can see Ethereum is a little below Bitcoin. It's still above 0, which isn't ideal. We'd like to see the Z-score in the negative territory like it was right at the end of 2022, but not a huge difference between Bitcoin and Ethereum there. Ethereum does look slightly better than Bitcoin. Mean dollar invested age, that's a good final comparison. So here we're looking at the top 10 assets by the amount of time they have been sitting in dormant addresses. And we can see Bitcoin is way up here at 564 days, Ethereum at 464 days. Not a big difference between their lines. If you see me shuffling back and forth between Bitcoin in pink, Ethereum in red. Ethereum had a decent drop here in mid-April, and Bitcoin's has been more flat and continuing to go up. But yeah, neither one is showing any significant signs of big dormant activity that could indicate that a breakout is coming and a big whale is making its move. Check social volume really quick. I'm just curious. So Bitcoin's social volume is here in green. Huge rise in it. This makes sense why social dominance for Bitcoin has been so extreme. So Bitcoin's is here, which has been huge since mid-March. Ethereum has been more neutral and just naturally fluctuating throughout the past year or so. So I would put a little bonus point with Bitcoin because it's being talked about more, but I don't think that necessarily means that Bitcoin is going to have continued price dominance. It just means it's getting much more of the focus, while Ethereum is seeing much more negative weighted sentiment, as we saw from the other comparison, and that could actually be more ideal for Ethereum once we actually start to see some sort of positive returns happening. So yeah, that's a little comparison about the two. I hope that helped. Let's move on to GALA, which I believe has had a pretty strong performance. Let's see, I'm gonna go to our main template. I also know they had a big top transaction recently. Let me check that. GALA would be right here. So yeah, currently it just had a $9.4 million transaction today, which is actually the largest top transaction we're seeing on the list of various Binance coins. So yeah, that's significant. We'll take a look at that really quick. Top transactions. So yeah, you can clearly see this was the largest over the past month. We also saw another one today that was a couple hours after this one. So there were two big GALA transactions, and this is very interesting. It could indicate that there may be a turnaround, and you can clearly see that they caused some big transaction volume spikes, with this being by far the largest transaction volume spike in the past year. Go a little further zoomed out. Yeah, this is actually one of the largest transaction volume spikes of all time for GALA. It even exceeds the one in September 2021, which happened right before this big jump, if you can see this big price spike. So that's interesting. You can also see this transaction volume spike leading to a huge price spike to its all-time high in November. So based on history, these kinds of spikes tend to do pretty well for GALA. No guarantees or anything, because you need to see that Bitcoin and the rest of crypto is actually moving up and not down. But I like the sign of that. You can see that 323 million GALA was moved out of this address. Let's add the price. We don't need Ethereum on here. So far after this transaction, it doesn't look like GALA has done anything special. This decline has mostly just happened because all of crypto has been declining. The 2 wallet, let's see if it's ever held GALA in the past. Yeah, it has, interestingly. So right now they're holding 10.7 million GALA, $10.7 million in GALA. That's pretty significant. Not massive, but significant. So they've never held this much, but it is a good sign that they've been holding GALA in the past. It doesn't look like their holdings made much of a difference in GALA's price. If I go back to the last 3 years, just to see if there's been anything significant. We don't need Ethereum. Yeah, it doesn't look, it almost looks like their accumulation of GALA coincides with prices moving down afterwards. So I wouldn't put too much into that. If anything, it's a slight negative. But regardless, I still am optimistic about this huge on-chain transaction volume spike. That's the biggest of all time, is worth paying attention to. All right, let's look at some others. MVRV, this is good for GALA. I'm seeing that both the 30-day and 365-day are well negative. And you also see the Z-score here in blue. That's at its lowest point in the last couple of years. So average trading returns being so low is a good sign. Funding rate, we don't have that for GALA. Whale transactions, as you would expect with one of the largest on-chain transaction volume spikes of all time. We're also seeing the largest $1 million or more spike since the huge profit taking that was going on here in November of 2021. So yeah, I would put this as a positive because it is more likely that there's some accumulation going on than dumping. And we can check that right now. If we look at GALA's price, it's at about 3 cents at the moment. So that would mean that we'd want to look at these tiers here. We'll go 1 million to 10 million, 10 million to 100 million, and 100 million to a billion. And it looks like it's a mixed bag. The lowest of the three is continuing to rise pretty rapidly. So I like to see that. The middle one, 10 million to 100 million, yeah, that's still in an uptrend. That being said, you know, we do see a big drop here where they were holding about 10.7% of the supply, and now they're down to 8.9. And then the yellow one is for sure the most concerning. They were holding, I mean, if we go all the way back here, at the top, they were holding about 45.6% in September of 2021. Almost 2 years later, they're now at 32.6%. That's not a great sign. If we just merge them all together, yeah, the line is going down quite a bit. So that's not great. We can also just combine all of the 1 million or more. So we're including some exchange addresses in this to see if it looks any better. And it really isn't. Yeah, I mean, this is indicative that whales aren't extremely interested in GALA. So this is a negative for sure. So even with that huge all-time transaction that is happening today, there's concerns that it isn't really showing up as increased whale holdings. Moving up to a few other metrics, we're seeing that the ratio of on-chain transaction volume and profit to loss ratio is very low at the moment. That's actually a good sign. It indicates that there's capitulation happening. Dormant coins, nothing really doing anything here. Lots of network realized losses. That's interesting to see. This is one of the largest that you're going to see on the network. A big negative 21.74 GALA realized loss happening on the 7th. These can often occur when bounces happen, like we saw perfectly right there back on March 27th. But so far, there hasn't been any results from it. Supply and exchanges is moving up. That's also not a great sign. Yeah, it's been moving up for quite a while over the last 6 months. I mean, it was down to about 11.4%. Now it's up to 16.8%. So there is more risk of a future sell-off as GALA continues to move on to exchanges. Social volume and dominance, nothing really special here. Weighted sentiment, nothing special. All right, so that's GALA. Let's do one more. I'm just going to pick between one of the two requests for the sake of time. Render, let's check that out first. So yeah, overall GALA, I don't think there's great signs there. I think there were more negatives than positives to see going through some of those. All right, so transaction volume, nothing really special, both trading volume and transaction volume are dropping. I'm not really seeing any recent significant top transactions. Render, daily active addresses are dropping back down. Circulation is pretty non-existent compared to usual. MVRV, that's interesting. So because of this huge rise, and this was our largest render price, at least over the past 6 months, the 365-day MVRV is still off the charts at about plus 64%, while the 30-day MVRV is actually down at about negative 13%. So this is a mixed bag. One can argue there's some good short-term upside because of the 30-day MVRV being negative, but long-term, you got to wait for render to come down a little bit because the average trading returns are just far too high here at 64%. You know, I see back here in February, it actually got as high as about 112%, and this was right at the local top before prices dropped back down. So you don't want to be in when the 365-day MVRV is this high. So I'd say proceed with caution there. That's a very concerning signal. That said, the Z-score in blue here, it is below 0. So when you combine all the time frames, it is a slightly better time than average if you are just holding for a very long time. Just be wary of this being so high. Whale transactions, nothing special there. The price is sitting at about $1.70. So we're going to look at addresses starting at $100,000 or more. Get rid of that one and that one. So we'll look at, yeah, it looks like these are where it gets too small, so, or too many exchange addresses. So we'll just combine 100K to 10 million really quick. And we're going to add price to it as well. So render has stayed pretty flat since February. You see the huge accumulation here that's happened, and it's actually stayed high. So this was a good sign, even when prices were dipping pretty aggressively here. The whales were holding on tight, and that eventually helped the price get right back to a higher high here at about 248 or so before it dropped again. But notice how the whales are hanging on. I think this is a good sign. Holding just under half of the supply, the 100K to 10 million coin addresses for render, have a pretty big amount of weight that they can pull for the asset. And I think it is good to see that despite prices dropping, they're holding on, similar to what they did after this drop here. So I wouldn't be surprised if render is able to come back up as long as this yellow line that holds these two tiers stays high. I'm also seeing a lot of capitulation. If I draw a line at the 1.0 level, that's going to be about right there. So we're seeing 1, 2, 3, 4, 5 consecutive days where there are more loss transactions happening with render than there are profit transactions. That's a good sign. Generally, when you see a lot of those in a row, like we saw here in early March, that's a telltale sign that a bounce could be coming up due to all of the people dropping their assets at a loss so that others can pick them up and profit from them. Not a ton of mean dollar age movement. There was major dormant movement back here at the end of January all the way up to the end of February, but that's kind of dried up and dormant addresses are staying dormant for now. Supply and exchanges is moving back down. That is a good sign, unlike GALA. It's sitting at about 15%, which is a little high. You know, any asset with over 10% on exchanges, that means it's always at risk of seeing a big drop due to a big sell-off, but at least it's moving down since mid-February. And you can also see here, this is when the mainstream crowd started getting very into render, and they were trying to ride the top, and you can see how it perfectly coincided with the local top and then fell back down. Pretty normal, and you're probably going to be happy with the fact that the mainstream is no longer talking about it. That means it's under the radar once again. And then weighted sentiment also showing some negativity, which is good to see. So yeah, that's render, guys. I think between the two, render looks a lot better. Render is showing better indications, especially with the whales, that they still believe in it pretty strongly. And I think that with GALA, there was just a few too many red flags, especially with the big holders dropping instead of rising. And that top transaction could very well be a dump, even with prices going down. So yeah, render looks pretty decent. I appreciate the person who asked to check that one out along with GALA. And for all the interest in PEPE, you know, meme coins are meme coins at the end of the day, and say what you will about them, but as far as big pumps and big dumps, they tend to have some of the largest, and you can benefit greatly if you're paying attention to an asset, even if you don't believe in it in the ecosystem for crypto's future. Sometimes just riding the crowd's FOMO or the crowd's FUD can have major benefits. So definitely check out those 3 assets, and check out any assets. We have over 2,500, of course, on Sandbase. So use your pro account to unlock some good indicators, and let us know what you see on the Sandbase Pro channel on our Discord. So with that said, on behalf of Maxim, who couldn't join today, on behalf of Balresh, who I'm very grateful was able to hold down the fort for our stream today. I'm Brian. Look for me on Discord. I'm always down to have chats about the markets with you. And in the meantime, stay safe and warm, and we will talk to you in about a week. Take care, guys.